Okay, class, this is a brief tutorial. I just wanted to give you an anticipation of tomorrow night on the Trading Technologies workspace. We're going to use Euro Futures, which I called up using the cmegroup.com. So you could call it up the same way, and then I searched for Euro Futures contract with 6E, 6E, and I'll get into that again tomorrow. I'll also give you a sheet that the Trading Technologies folks had given to me that tells you about all the contracts that they have. They preloaded some, but they've got S&P futures, NASDAQ futures, gold futures. But we'll start with this. Now here it says the market's closed, but I think if you call it up at night, you'll see some market trading like you saw that night. Either way, this will give you a chance to play with it even when you got a free moment during the day. And you'll notice that the contracts are listed for March, June, September, and December. Uh, and each contract is good for 125,000 euros, which means, let's say you're doing a business transaction that closes in the future, we'll call it March, and you knew you were going to receive 125,000 euros, but you want to lock in your profit today, you would go out and you would be receiving these euros in 3 months or in March, right? So you'd be receiving them, so then you would enter into a sell contract, and someone would buy them. You would be a speculator on the other side of the trade and lock you into a price. And how we do that, we'll look at it on the Trading Technologies platform. Now, what happens if you have a date that's between December and March, or an odd date? Well, I'll explain how we do that tomorrow. But basically, you would roll over it and close the position up that day. And you would have a position with the futures, with the CME group, which you would close out by profit or loss. Then you'd have your actual position. Both positions would net out. So again, that's something better to be discussed in the classroom, but I wanted you to get a look at it, just so you can prepare yourself. And let's look at the website for a minute now. So 125,000 euros for each contract. So on the website, you'll see they have already preloaded when you call it up energies and equities and interest rates. You can create a new space called Euro Futures, and when you get there, you're going to have a blank screen. And I've been playing with this a little bit this morning. So we'll look up at 6E, which is the Euro contract. And we'll just look at the most active one, December's. And I'll pull up the market grid. There's the market grid. So let's say we wanted to trade 10. There were the different orders, limits, markets, stop limits, stop markets. These are things we talked about in the beginning of our class. The market order executes you right at the market. So there's the market order, the 10, in there, and let's see what we can do. So now we've executed at the market 10 of them by putting these in and then clicking on the sell side, which showed 10 immediately. So how do we track our P&L? Go back to the widgets, and let's look at our positions. And there you have it. We short 10 at an average. Don't look at my P&L right now because I've been trading them this morning, just playing around. But right now I'm short 10 at 106.53. So really, that's the price you want to look at just for now. I had played around with it, and it resets every day. But if you start fresh, you'll see your dynamic P&L throughout the day. And as these markets keep trading, you'll see that P&L continue to change. It'll go down. Since I'm short, or I sold a contract, the P&L will go down as the prices go up, and this is the market rate, and it'll go up as the prices go down, because effectively I've sold the contract. So I've sold, and as the prices go up, obviously it's bad for me because I could have gotten a better price. And the more you play with this, like any computer system, you can search for other instruments by doing that, but by hitting this, the more you play with this system, the more you will get familiar with it. And then also the Trading Technologies, I showed you that last week, they have an excellent video tutorial that also help. Again, that's for tonight. We'll do more of that tonight. But and we'll also look at the credit crisis. We'll look at leverage tonight. So let's see how leverage is employed. But let's take a look at one of the widgets I want to show you. This is how we sort positions. Let's call up the chart. And there's your chart. And again, as you hit these, you have to call it up 6E. And we'll look at the December contract. And there's your chart. Notice as this thing keeps trading up, now I'm down 2,000. So I was out, again, to be clear, I was down 1,500 when it started, but now I'm short 1,250,000, and every time it picks up, I continue to lose money. Now, if this starts trading down, you'll notice I will make money. But right now, these markets continue to trade up, which means effectively that the dollar is very strong this morning because you only needed $1.06.49 to buy the euro. Now you need sort of a fraction more, but in dollar terms, that could be very real money. You know, as it trades down, as the market, as sell orders come in, you'll start to see the market come down. It's a supply demand scenario. And now you see my P&L starts to go down a bit. Now you see orders coming in on the sell side. And that's actually where the markets are trading today. To buy a euro, you need approximately 1.06 cents and 1.0658 cents and 58 of a cent. So you're taking it out for four decimal places. There's such a large volume and so many fluent transactions in this market that they need to go out 4 decimal places. I believe if you do the math, it's like $12.50 a contract when you get out. And now you notice the sell orders are coming in. As sell orders are coming in, notice my P&L starts to get a little better. Alright, that's just a brief tutorial. If you want to play with it a little bit or get a little more familiar, or after tonight, I'll do another one of these. But I just wanted to give you this, to give you a head start. And tonight we'll go over it more in detail. And see you then.